First and foremost, thanks everyone for tuning in and joining us today. What we will be doing is we will be having a look at the UK Services PMI data. And in case you're a new trader, what we will first start with is the fact that British Services PMI, Purchasing Managers Index, is based on a survey of purchasing managers in the services sector. Respondents are surveyed for their view of the economy and business conditions in the UK. A reading which is higher than the market forecast is bullish for the pound. Now, this is just a reminder in case you forgot why we're actually looking at this indicator. Now, right here on the whiteboard, you can see two slides. This is the slide of how the indicator has been developing over a period of 12 months, and here you can see the previous data with the anticipated forecast according to a survey conducted by Bloomberg. Now, what we can mention before we move on to the estimates is that, well, last time when we actually had the data release, the UK services sector continued to expand strongly in February. A survey has said with job creation at its fastest pace for 4 months. As already we're going to have a look is then the next step is the estimates and what some of the economists that were polled and surveyed by Bloomberg had to say. Over here, overall, 29 economists were surveyed. Here, 10 of them are represented right here in the chart on the whiteboard, and we can see and have a look that the high estimate is 58.5, while the low estimate is 57. So overall, the median estimate is 57.8. And of course, we should also mention what Dukascopy traders and community members have to say about the upcoming data release. So in case you actually want to share your view on the matter, be sure to join and participate in Dukascopy's fundamental contest. And you can provide your view on whether the impact on one of the discussed currency pairs will be bullish or bearish, coming from the economic data release. So right here we can see that 43 people who participate in the contest, or 57% of the respondents believe that the impact will be bullish, while 33 believe the impact will be bearish. Right here we have one of the community members who provided a comment in order to support his view, saying that fundamental components still bullish. At the same time, the technical component of growth is already in a consolidation phase, and the market is already in a neutral stage. In this case, the bearish option is also possible. So that is all with regard to some of the fundamental aspects that we wanted to discuss. And now I'm going to give the word to Alex, who will cover the technical side of things, and he will discuss the potential impact on the Great British Pound. So, Alex, feel free to join us on one word.
Thank you, Gita. Hello, everyone. So today, actually, I'll be speaking about the positive surprise trading strategy, as the consensus forecast stands for the improvement in the services sector's activity, as well as keeping in mind a bit statistics from the UK in the recent months. So first of all, I would like to point out that just recently, upbeat data from the Eurozone pushed both the single currency and the sterling significantly higher. And when having a look at the most traded currency pair, here we see that just in about slightly more than half an hour, the pair has performed a 45 pips rally. And in regards to the cable, that the market reaction was slightly less, so that was 60 pips, even more impressive actually, and therefore that's relatively difficult to predict where the pair will find another resistance line. And as you can see, currently the pair, the cable, stuck around 169 level. To be more precise, the current market price is 169.31, and the next key level is 169.42, represented by weekly resistance. And actually in pips, that will be just 8 pips from the current market price. So the market reaction is usually significantly higher. And if I recall correctly, the UK services sector accounts for around 78% of the overall economic activity. Therefore, the data tends to have strong impact on the financial markets. And as you can see, the average market reaction in the last 5 months was 33 pips. Therefore, the recommended take profit is placed 33 pips higher from the current market price, and the level is 169.65. So we see that the pair has performed another impressive movement just recently, even though that's 4 minutes left before the news release. So the latest candle equals 18 pips, so which also pretty impressive. Well, as already mentioned, the key level for the long traders is currently 169.41, represented by a weekly resistance, and therefore that can be an alternative take profit for the long traders in regards to the short traders. So the recommended stop loss is placed at 169.24, and this level is represented by a recent low. And I think that will be just 17 pips from the current market price. So I guess that will be rather risky trading strategy for the first time actually. Regarding the market sentiment, so nothing really changing, and as you can see, more than 70% of Dukascopy traders are selling the sterling versus the greenback, and the currency index is also suggesting that the sterling will depreciate, according to Dukascopy traders once again, while at the same time they expect that the greenback will climb versus other major currencies. Regarding the pending orders, here we see completely similar situation in the 50 and 100 pips range, and slight majority of pending orders are placed to sell the pair, meaning that traders expect the cable to depreciate even in the medium and longer terms. And when having a look at market sentiment provided by other market participants, including London Saxo Bank and DailyFix, here we see that traders at these 3 brokers are even more pessimistic on the pair, especially in DailyFix, and they are selling the pair in 82% of the time. So really very strong bearish market sentiment. However, if we have a look at the technicals, here we see a different situation with aggregate technical indicators on the hourly and monthly chart sending buy signals. However, indicators on the 30-minute, 4-hour, daily, and even weekly charts are neutral, so suggesting that we can see sideways movement and the pair can stabilize around the current level. And what is more important is that MACD, RSI, and stochastic indicators are all sending sell signals, meaning that the market is overbought already, and perhaps we'll see even a movement to the downside. So just less than a minute left before the news release, so I guess it will be worth just to emphasize on the chart and wait for the data. So currently the pair is trading at 169.38, as already mentioned, just slightly below the weekly resistance. And yeah, actually just to provide additional support for my word, if we have a look at the 4-hour chart, here we see that next strong resistance is located only around 170 level. However, it's significantly above the average market reaction on the UK Services PMI. So therefore, we were forced to calculate the average market reaction and place the potential take profit right there. So currently the pair is trading still at the same level, and the data came at 58.7. So that was above market's forecast. So another set of the upbeat data from the UK. However, market reaction is rather muted, surprisingly actually, and currently the pair is still trading at the same level, around 169.41. So as I already mentioned, 169.42, that's a key level for the long traders, and even upbeat data from the UK was not able to push the pair above this level. So once again, any move above it will clear the way to 170 mark. So just to conclude, on the daily chart, we are having the channel up pattern, which usually is formed in the strong uptrend. Here we see that once again, the next key level is located just around 170 mark. So once again, the outlook for the pair is bullish when having a look at the technicals and fundamentals from the UK, obviously. However, traders do not believe that the pair will continue its appreciation. Therefore, they are selling the pair in vast majority of all cases. Yeah, just recently the pair has managed to penetrate the key level and currently is trading at 169.49. So just yeah, 14 pips left before the take profit is reached. So I guess that will be pretty much from my side. So once again, the long-term outlook is bullish for the pair. So I hope that was useful for some of you. And now I'm giving the floor back to you, Gita.
Thanks very much, Alex, for providing us with a very interesting technical analysis. And that is it with regards to today's economic data release. Be sure to tune in today at 12 GMT for our Dukascopy research webinar. Until then, take care and see you soon. Bye.